Thank you all for joining us. I appreciate that some of you might have sore heads after the weekend's celebrations, but we're here this morning to discuss profitable growth in Scotland's hospitality. And I'm delighted to welcome an esteemed panel of guests joining me this morning. My name's Robert Holland. I'm the MD of a company called HotelPartner. We are a technology-enabled revenue and distribution service for independent hotels, and have been a proud sponsor of the STA now for a couple of years. We work with over 500 hotels in 170 cities across Europe, and have been working in Scotland since 2018. I'm going to let my panelists introduce themselves before we start our webinar, but this is as much about you, the audience, so please, if you do have questions, do write them in the chat, and we will hopefully get around to answering a few of those questions later in the session. Ian, over to you.
Yeah, thank you, Robert, and thank you, Mark, for organising this. Good morning, everyone. My name is Ian Stokes, and I sit on the board of the Scottish Tourism Alliance, and I have done, I think this is year 2, Mark. I'll let you nod your head to approve that message. I've been in hotels in Scotland for 20 years now, from Five Red Star right the way through to the economy end of the market. I recently finished, as in 2 weeks ago, as COO at House of Gods Hotels, which is a boutique chain which we grew to 3 properties over the past 7 years, and we have another couple in the pipeline, so exciting times for them. What I do currently is I'm working with a number of independent hotels to give them competitive advantage over the bigger operators, if you like, and really invest some time into independence throughout Scotland. My view today on what I can bring to the table is give you some practical advice on what can actually deliver for you and can really make a difference to your business. So looking forward to talking.
Thanks, Ian. Kat, would you like to introduce yourself? Lever, thank you.
Morning. I was going to say there's 2 Cats, just to add to the confusion. Good morning, everyone. My name is Kat Lever. I'm the Director of Strategy and Competitive Intelligence at Visit Scotland, our national tourism and events organisation. And we really exist to both support the sector in connecting them to audiences, both domestically and around the world, and to generate or stimulate demand globally, which there's lots of great stuff going on at the moment, not least the World Cup and the Tartan Army, which I'm sure we'll come on to talk about shortly.
Thanks, Kat. Aoife, perhaps you can introduce yourself and then introduce us to some of the stats that are happening at STR.
I can do. Yeah, good morning. Aoife is my name, and I'm with STR, so part of the CoStar Group. And we provide benchmark services to all hotels across the globe. And with that data, we're able to also share insights and hospitality analytics at events like these. So we like to support these events to make sure that everyone has access to this data. So shall I just go ahead and share some just kind of general insights, and I'll leave Scotland till the end, and we can talk about it in time, but let me share my screen, and you should be able to see my main screen there. All right, so just to give some insight globally, and then we'll dive into Europe. I'm hearing myself. Can I hear myself? Okay, we're good again. So first up, globally, demand has been growing. It grew by 1.6% year to date, April. So up slightly on the same time last year, as you can see to the left of this chart. To the right, you will see at a country level, it's a really uneven growth. So Asia Pacific is growing the most, but in the top 5, we have Germany and Italy growing faster than any other country in Europe. Germany, because of its late recovery and a return of conferences and Congress, which are hugely important to many of the major German cities. And Italy, of course, benefited from the Winter Olympics. Down towards the bottom of the chart, unfortunately, we see the UK, so demand growing by 0.8%. Now compare that to the average growth of Europe, which is sitting at about 1.5%. The UK is trailing a little bit behind on the demand front, and we'll dive into that a little bit more. From a supply perspective, however, supply is also growing at a very muted pace. So on average, 1 to 2% growth every month for the last couple of years. And as you can see in the month of April, that has dipped to 1%. Now, although we like to see development of hotels, that does help when demand is a little bit muted. So positive demand growth has driven some strong occupancy change versus same time last year. So we've got 1% growth here in Europe, so reaching 64%, which does mean that more than 6 rooms out of 10 are sold every day in Europe. So that is a good result. I'll just bring your attention to the Middle East here. So down 19% since the onset of the conflict. We have seen occupancy decline by 31% in the region, in the GCC countries in particular. Some countries are more impacted than others. You can imagine the UAE is really impacted with a 31% decline, and Dubai is actually declining by 60%. So really dependent on international inbound traffic. So that is a struggle for them. On the flip side, however, Saudi Arabia is doing quite well. It has pivoted to domestic demand, and it is definitely less reliant on international demand, unlike the UAE. So that is the Middle East. So not a pretty picture, but we are hoping that come September, October, that will start to grow positively once again. Time will tell. From an ADR perspective, similar picture to occupancy, slightly faster growth. You can see that most of the RevPAR growth across the globe is coming from ADR rather than occupancy. So we've seen a 2.3% RevPAR growth in Europe year to date. And as you can see here, that's supported by 1.4% growth in ADR. So I'm just going to take a few moments before I hand back to dive into the UK in the context of Europe, and then we'll leave Scotland for the end. So first up, I'm going to mention uneven performance quite a lot throughout this presentation. So we can look at Europe growing at 1% occupancy, but then we have to dive into a more meso level to look at a country level. So you can see to the left, the Nordics is growing at the fastest pace, almost 4% growth, but within that, you have some high performing countries. So Sweden is growing by 7%, Denmark is growing by 6.5%. So the Nordics are having a little bit of a renaissance. For one reason is that they recovered much slower than other countries like the UK, for example. And the second reason is perhaps staycation business is becoming a thing again, and they are benefiting from that. You will see, though, that the United Kingdom sitting here with 0.1% growth in occupancy. Now, much of the growth is reserved for those countries that are selling around the 6 and 10 rooms, so 64, 62%. All these countries are seeing some occupancy growth. But for those with higher occupants, like Spain and like the UK, growth is harder in occupancy terms. In ADR terms, again, that growth is really reserved for particular leisure destinations. So Italy, like I said, a lot of that is down to the Olympics, but Italy has had a bumper couple of years due to its attraction for the leisure customer. Greece also attractive with a lot of resorts. And a lot of this ADR growth, however, is underpinned by the luxury segment. So really important to note that where you're seeing that high growth, a lot of it is coming through the luxury segment in Europe in particular. But if we go along the chain here and we go right to the end, we can see that the Netherlands is in decline. And I wanted to reference that in particular because this is related to the new VAT rates. So going from 9% to 21% in January, much of that is being, or some of it is being absorbed by the hotels and not the consumer, hence the decline in rate. And then if I just kind of go to Spain here before I close out on this slide, Spain is quite different. You will see every month, month on month, Spain performs extremely well because it manages to have this kind of perennial appeal and this appeal for all classes. So it's not just luxury that's growing, it's not just economy that's growing, it's all classes are growing, and it seems to attract all sorts of leisure and corporate business, but also domestic and international. So that's doing very, very well. So to summarize on the UK, UK growth is relatively soft. We track 160 submarkets in the UK. In the month of April, 52% of those submarkets reported a positive RevPAR growth. So that's in line with 2025, behind the peak in 2008 before things started to go very wrong. But we have been tracking against 2008 just to get a feel for that performance. But we expect at a minimum that we will track 2025 in terms of RevPAR performance and hopefully back into a good end to the year. Performance definitely aligns with a very cautious consumer sentiment, which I'm sure we will talk about a lot over this call. Occupancies are stable, ADR is growing moderately, but well below that 2.5% expected inflation for 2026. And not unlike the rest of Europe, luxury is growing at the fastest pace. So 4% growth here, a little bit lighter than the rest of Europe. But I think what stands out here for the UK is that lack of growth in the economy and mid-scale segment. That really is telling of a lower domestic demand. So we're not getting the SME business coming through to all markets, and we're not getting that heightened domestic leisure business either, which is bringing back those classes. But worth noting on supply as well that 8,800 rooms came into the market, came into the UK in the last 12 months, and 60% of those sit in the economy, mid-scale and upper mid-scale segments. So that makes it difficult to absorb. I'm going to keep going, and I'm on a roll here, but London as a whole is really impacting that total UK number. So London has had it tough. So down 0.4% in occupancy year to date, down 0.7% in ADR. And you will see that luxury is growing at a very slow pace, so very unusual for a key international hub like London to grow so slowly in luxury. But there are two things that are impacting that. One, you have the weak US dollar. So either the US traveller is not coming to the UK and not coming to London, or they are trading down. So we are seeing lower impact there for the US traveller, but also the Middle East, hugely impacting the ultra luxury hotels in that they're not getting the suite business, they're not getting the high paying Middle East business either. So that is a challenge for London, and it really does filter through to the total UK number. And here's some data from Tourism Economics. So our partner in quarterly market forecasts, you can see that the UK is getting less business than the average European country from the US. Italy has been standout for some time, but obviously peaked also during the Olympics. But that has been challenging, and it's really telling in those London numbers. And to pull out the regions briefly, so I talked a little bit about total UK, then London, now the regions. So although the regions are doing okay from an occupancy perspective, it was a little bit softer than we expected. So our forecast for the full year 2026 has gone from a 0.5 percentage point growth in occupancy, which already was not well received, to 0.1%. We do expect the second half to be a little bit soft in terms of occupancy. Supply, luckily, is not growing at a hugely fast pace, but it's matching the demand growth of 1.7%. Which results in that meager occupancy growth. However, we do expect to see further occupancy gains in 2027 of 0.6 and 2028 of 1.8. So 2026 may be kind of that transition year, but as we go forward into 27 and 28, we expect to see some improvement. And I'm nearly done. Rates. This is really important, particularly for the regions. Unlike London, the regions continue to grow rate. Every day of the week, every month this year, we are seeing rate growth. Now, I mentioned supply. Very little supply growth helps drive that occupancy, which drives a little bit of compression. We've got lots of great events, particularly in Glasgow. Edinburgh and Cardiff are showing some strong rate performance this year to date. So I'm going to leave it there, and I have some more slides specifically on Scotland, which we'll touch on later.
Well, thank you for cheering us all up with your statistics there, Aoife. I'm hoping that Ian can be a bit more positive and continue the good grace of the Scottish win last week or over the weekend.
Definitely.
Come on, Ian, tell us something good about the hotel market in Scotland.
Yeah, absolutely. I mean, the big winner that I'm seeing year to date really is Glasgow. I think he's in the call actually, but I got a particularly excited call from Diego at STR at the start of April, and he barely said hello. It was what's going on in Glasgow. The rates through the roof, the RevPAR's coming in. It's starting to challenge Edinburgh in terms of what's coming in there, and the sentiment's absolutely true. What we've been seeing in the city is very much an events-driven. An events-driven economy coming into the city, and that's through gigs mainly at the Hydro, but also at Hampden Park and festivals throughout the city. We've also got a really good programme of gigs on Glasgow Green, which are coming in. I suppose the main thing to note in this, which is different to previous years, is people would always buy their ticket for a concert and then they would book their bedroom. Now what's happening is they're buying their ticket for their concert and they're waiting, and within that 14 to 7 day window, particularly in Glasgow City, they're then deciding if they can afford to go or not, and more often than not it is going. Now that's actually a real change for us, because we've always seen far more significant demand at point of purchase historically, and we can cite that back to Taylor Swift, we can cite it back to Oasis, whoever you think about it. As soon as that date was up, it was gone. But the difference now is that it's coming in last minute. So in practical terms, what I would say is we've seen £700 hotel suites going within a 2 day window, purely based on the fact that it's something a little special before a gig. So I would urge you, going into that week, hold your rate, remember the worth of your hotel rooms, and kind of move on from there. Is that good enough news so far for you, Robert?
Yeah, thank you. I mean, obviously, Glasgow hasn't seen the supply growth that maybe some other parts of Scotland have seen. Mark, can you talk to us a little bit more about the rest of Scotland and where we're seeing some investment at the moment?
Yeah, I will. And Kat, I'm sure we'll be able to sort of pick up on quite a bit of the sort of Visit Scotland insights. I mean, it's an interesting one. I was just looking at our dear friend Jeff Ellis, fellow board member, in terms of impact of music tourism. Just to give you some stats, across 2025, just over 500,000 tickets sold, 121 artists, and fans from 63 different countries around the world came to Scotland to take part in festivals, and 11% of those spent at least one night staying in a hotel in Glasgow. So, there is that sort of reinforcement of some of the commentary that Ian has said. I mean, part of our aim and ambition is to obviously get more pounds spread across Scotland and getting more people to explore Scotland. We're certainly seeing stays perhaps shorter in the main urban areas, and people venturing out into the rural parts. Inverness is still strong, but I guess coming back to Ophi's points earlier, that domestic market in the more middle bracket family audiences, that's where the squeeze is. We're certainly seeing strong performance in luxury. The demand is there. We've got about, I think, just over 31% of the total visitor spend now is in luxury, and it's not just an audience profile that are of an age bracket that are nearer to you and I, Robert. There is that younger generation looking for luxury experience as well. So that's good growth, and obviously businesses are needing to respond to enhance the product offer. We know that the visitor expectations have raised considerably. We've had some challenges on our islands in terms of logistics of transport, and so probably not seen the performance levels that we would like, but demand is still there, and certainly our current climate is showing us that the American inbound market, the tour groups, are very strong, still holding up, and we have seen, and I think an interesting consideration is around the impact of climate. Being a cooler destination as we are, we're drawing perhaps more to the north than those are in perhaps experiencing in the south of the UK, and that's got to be a good thing. We'll make sure we keep the midges at bay, but the trouble is, or the challenge for business, of course, is about how do we convert to margin to be able to reinvest and grow and improve the quality offer. So Tartan Army, we will mention it lots of times, I'm sure, will be, waving the flags and seeing that boost, pushing people this way. There's a lot of activation in Boston from the efforts of Visit Scotland, but we saw through the Euros the real spike of German visitation as a result of the efforts of the Tartan Army, even though the football wasn't as good as we had hoped it for. But we're all having had a sector call with colleagues last week. There's definitely a degree of anxiousness, particularly even in the self-catering market. It's not seeing the demand from the domestic audience at the pace at which we would have hoped to have seen, given the impacts in the Middle East, and obviously the uncertainty around jet fuel. But we have a big season of events, a lot on the programme, and Commonwealth Games, of course, not so far away, will be an interesting one for Glasgow, because the teams are all staying in hotels, and therefore there will be displacement of the more traditional visitor, and actually a lot of that would have perhaps been overflow from Edinburgh for the festival. So we might see greater dispersal of those looking to come to the festival out into other destinations, such as Stirling, Dundee as well, who will be the benefactor of that. So yeah, lots to play for, but margin is challenging, and actually how can we grow that bottom line to continue invest and look at that luxury piece. And I'll stop after saying we've obviously seen some good wins as well with new route development, inbound route development, particularly into Glasgow as well, in recent weeks and months. So I'll stop there, and maybe Kat can fill in a few more niche points, as well as little gems that she would have brought back from Amsterdam, even though the tax rate's at 21% now.
Thank you, Mark. Kat, it'd be lovely to hear your views. I mean, we were speaking last week about the number of weddings in Scotland this summer being down because everybody's spending money on World Cup tickets. Is that true, or are you seeing any trends yourself?
I can't say whether that's true or false yet. We might find that out in the longer term, but I think certainly spending patterns have shifted domestically as a consequence of the World Cup, and Mark touched on it there. The Euros is a really good benchmark of that kind of brand Scotland effect that the Tartan Army have, that halo effect of amplifying the destination brand and the strong advocacy for the character of Scotland, which encourages visitation in the longer term. I think the World Cup's a far bigger event. It's got far greater coverage, so inevitably will be very positive. And certainly my feed, although I appreciate it will be biased, is absolutely swamped with love for the Tartan Army. And fantastic posts about the teams out there and what they're doing. So I think we can safely say that will have a positive effect, longer term on visitation. Certainly the early indications, we're waiting our official statistics, are that volume and value are kind of steady and growing across key markets. Visit Britain are still predicting a 4% growth in inbound visits to the UK year on year for 2026 versus 2025. And our trajectory usually tracks those kind of UK macro trends with a slightly higher rate of growth for international demand. So particularly that North American market. So I think with the effects of the Tartan Army added into that, we can anticipate a sort of steady but positive inflow of tourists from North America. And we're really lucky. We've got a very strong brand appeal across those key markets, so both in America and in Europe, where some of that warmer climate impact is being felt. So we're seeing a summer demand peak. The strength and connectivity that Mark talked to. So we've seen a lot of extension of routes as well as additional direct routes coming into Scotland across both Edinburgh and Glasgow, which has been very positive. And I don't think we can underestimate, both Ian and Mark have touched on them there, that pipeline of major mega events and what they do for raising the appeal and the profile of the country. So all positive indications against a backdrop of challenging operating environment.
Thank you. Aoife, before we turn to you and actually see what the maybe some of the forward demand for Scotland is, Ian, what's your take on what we can look forward to this summer in some of the key cities and other parts of Scotland?
Yeah, it's a great question. What I'm getting is, in all honesty, quite a mixed picture from different operators. So I think ADR wise, we're going to do really well right across Scotland. This is going to be driven by international, which we know. However, what we are seeing year on year across a few different operators is larger last minute cancellations than usual, and this is due to an uncertain international market. There's a new war every day, isn't there? And that's causing people to make secondary plans and then change plans. What I would say is that my feeling is that the summer is going to be okay. Where I would urge people to get ahead of themselves is actually look at October, November, December, and have a think about how they're really going to go and attract that. They're going to go and attract that domestic customer in. We kind of have a bit of a feeling at the luxury end of the scale that our most attractive route to market is actually nurturing our customer database through our CRM, and that's through generosity, it's through touching base with them, it's through the sort of the soft giving back to them, saying, oh, if you're going to come here, we're going to give you the second night half price. And I think that, what we should really look at, all of us right across the different market segments, is that Scotland is a premium product. And when people go away, we as a nation, we expect value for money. So just remember that. I would say that the little bits that you can give to your customers will make all the difference coming out of the summer, and the international will perform for you. But if you're putting money into anything, marketing wise, put it into feeding your CRM, because that's where you're going to see a difference this year.
Thanks, Ian.
No, I would also just say as well, be aware. We saw it at the start of the year, and there's quite a lot of consensus of people I've spoken to that incremental spend, particularly in F&B, has been a bit of a headline. We saw that January, February, March. So we need to be wary of that coming in, and sometimes a wee bar tab or a drink on us when people arrive can make a real difference.
We're definitely seeing that shortened pace across the hotels that we work with, and people, making last minute decisions, but also the cancellations that you mentioned. Mark, I mean, it would be lovely to hear from your view from your members, but also, those participants on this call. If you've got some information to share with us about your own properties, it'd be lovely to hear from you as well. But Mark, how are your members faring at the moment?
Yeah, I mean, as Ian said, I mean, it's a mixed bag. I think from the call we had the other day, and there's a number of colleagues who were on that call who've joined today, are relatively confident about the next couple of months. They know they're going to have to work harder for it. There is a bit of nervousness around possible cancellations. I put in the chat the Scottish Independent Tour Operator Association. So these are the guys that have got the sort of 6-seater private tours, Sandy Bloomer and co. They're showing a 15 to 20% year-on-year growth in terms of demand, which is really good. So that's obviously they're not cheap, but at the same time, there's groups coming together and obviously wanting to go off and have that experience. On the flip side, however, Fergus from the Scottish Tour Guides Association, where you're booking independent guides to take you around, they are actually seeing cancellation. So there's again sort of swings and roundabouts. Those that are in the golf space, golf, obviously, we've got a big program of golf again. All the golf courses seem to be faring well. We've got the Genesis Scottish Open not just round the corner. And of course, the Open, it's this year not being in Scotland, is still not sort of having a massive impact on us. It only helps raise the profile. But, ultimately, the worry or the concern is how do you continue to elevate and make those experiences that much more special? There's a lot of investment that needs to go into nurturing those relationships with the customer and the guest, and I guess that all comes with time, and of course it comes with skill. And we have seen in businesses now, because of the changes into Enix, a more challenging situation where there are fewer perhaps people working in the business, and those that they're not able to recruit that younger generation to provide a bit more cushion and comfort on the ground to allow people to have more time with guests. That will have a bearing on possibly that level of interaction. But those that are clever and are working in collaboration with partners, and I think that's a really good needing to be done in the destination. We've had Feish over in Isla at the moment a couple of weeks back, and it was great to see and continue to see how operators, accommodation providers work very closely with the distilleries and really sort of lift the offering and the product, and they all come together to collectively promote the experience. And this collaboration is one of Scotland's key strengths. We're a small country. We're all unified behind a common national plan, and I think that partnership working across the public and the private sector, obviously Visit Scotland and the industry together working really closely in a whole heap of different things, but we can't be complacent. And I think that's the really big thing, is that thinking they will just come and accept Scotland for its heritage, its beauty, its landscape is great to have as a natural asset and a wonderful USP, but there is this raised expectation that we need to go and do a lot more, and obviously using data and insight on a more timely basis. And that's where Kat's brief is to help inform the industry in a much more timely fashion and really be ahead of the curve rather than actually tracking behind. And we see what happens across the pond in Ireland, our nearest competitors. So the mood music is relatively, as I say, positive, but I guess that watch out is when we go into the autumn months and the dark season. Is are we going to make enough hay in the summer to enable some of these businesses to then invest over the winter months and come back all guns blazing and go up another notch again? And how do we hang on to that domestic audience? And events next year, we've got major events, not of Grand Depart, we've got the Open, we've got big golf, and then we've got the Euros coming. So there's a lot of good stuff to look forward to. And with our political change, that we've now got a cabinet secretary for tourism in Stephen Flynn, this importance that we've been stressing about tourism is the opportunity. See it as a future industry, see it as a vehicle and an industry that can enable a lot of economic growth and help plug the gap that sits within the government coffers at the moment. I mean, we're an enabler. So, and I hope that obviously our new politicians will, see us in that light and really push forward and invest and help businesses invest in the way which we would want to. So, it's certainly not in the doldrums. I think we're faring better. Looking at a recent sentiment tracker, which was published by 56 Degree Insight, there has certainly showing positive indicators. Energy, of course, costs, as we all know, but the holiday intentions of Scots are still there. It's just about affordability and making sure that we capitalize on everything that we can at the right time in the weeks and months ahead. So I'll pause there and let someone else come in.
Yeah, Sarah, thank you for your note in the chat talking about the holiday park sector and the increase in refundable bookings. I think that we're seeing that in hotels as well, that people are potentially hedging their bets, as you put it, and uncertain about what the summer's going to bring for them. Aoife, are you going to share some more joyous information about Scotland than you did about the UK?
I will, and I was thinking before I do that, I'll just quickly show some forward booking data just to kind of touch on what everyone's been talking about there, and maybe whoever wants to comment on that. So first up, I've got two slides. I've got Edinburgh. So this is 90 days out as at June 1st. Daily business on the books. So anything that is sold reported to us as being sold from their PMS data. So the green bars are this year versus the blue line being same time last year. And I think this period here at the end of July is around Commonwealth Games, if I'm not wrong. So, talking about that overspill or overflow into Edinburgh, is that reflective of that, where there's more inventory needed with such compression in Glasgow? So I think that's quite interesting. And then as you go into August, it's very varied, isn't it? Day to day, Sometimes ahead of last year, sometimes not, but certainly towards the end, it looks like the end of the month, it looks like there is business on the books. Now, whether that's cancelable or not, who knows? So I think you've got that dilemma with hotels in that there's a very short booking window. We have seen the 7-day window increase massively in pickup, so that 7 is increasing, 14 and 21 are increasing a little bit less, but then that 90-day booking window is declining essentially. So you've got that combined with the fact that you may have bookings that are cancelled in due course. It's very hard to gauge, right, what's going to happen 30, 60 days out. But this is always kind of indicative of the performance. And generally, I mean, certainly actualized occupancies across Europe, and Scotland is no different, have actualized at a very similar level to 2025. So usually we're seeing that occupancy come through, even if it is very, very last minute. And then the next slide is Glasgow.
Aoife, can I just interrupt for 1 second?
Of course.
Aoife?
Let me go back. Yeah.
I'm not sure that necessarily everybody on the call knows what STR do, and the great data that you're able to share with us is really, based on the number of hotels that are participating and submitting that data. But perhaps you could just generally introduce what STR do and where you get this data from, because it would be great if more people could contribute their data. And I know that there used to be almost a free to view data from yourselves.
Yes, so we are in the very fortunate position that we collect data from almost half of the hotels across the globe. We have reporting data to us. In the UK, we're very strong. I think we have about 80% of the total census, so of all of the hotels that we have in our own database are reporting data, which means that our data is very strong. And I mentioned earlier the number of sub-markets that we have reporting in the UK is basically an aggregate of the hotels that are reporting data. So for example, in Edinburgh, I should know how many hotels we have, but let's say we have 100 hotels providing us with data. I know my colleague Diego can shout that on the chat, how many hotels are reporting. But we'll have 100 hotels, and that's our sample. And that sample every day of the week is telling us what their supply was, so how many rooms they had available, how many rooms they sold, and what their revenue was. And in return, we're able to generate KPIs for each of those individual hotels, which you can then, in our CoStar product, benchmark against your chosen competitive set. So you can say, I want to benchmark my performance against my direct competitors, which may be next door, which may be on the street parallel, but which may be in a different city altogether, because you might be a golf resort or a wedding venue. So you can choose any resort. And you mentioned Ireland there, Mark, as being the closest competitor. You can benchmark your castle against a castle in Ireland. You can do that. Unlimited amount of comp sets can be set up in the product. But then what that data does in aggregate is it reports up to a market and a sub-market. So we'll have Edinburgh Centre, so really right down in the centre, Princess Street, etc. And then we'll have Edinburgh as a whole, so the broader market, which is a shape of a market. So that is when I report out on market level data or sub-market or even sub-market class, which might be Edinburgh Centre luxury only, you're getting more and more granular into that. So anyone on this call that is not contributing, please do reach out to us, because we really have great solutions available. And on top of the historic solution, we have forward-looking, which is what I'm sharing on the screen right now. And that is at the moment sitting outside of our CoStar product, but it is coming towards the end of this year. But you give us your data, and in return, we give you a comp set if it's available, but we definitely can give market data back. So in return, you would see every week, how's your pickup and how are you performing looking forward versus your competition. So here we're essentially saying over the next 90 days, each day of the week, at the end of July, Edinburgh has about 80% of the rooms sold of the reporting sample. So if you're a hotel and you only have 60% on the books, that's your kind of indicator of, wow, I need to do something. That might be price, that might be marketing. Ian, you mentioned CRM, that might be going out to your database of previous guests to promote your offers and promotions. So that's what we do in essence. But yeah, please do reach out to me or Diego if you do have other questions.
Thanks, Kat. And before you continue, I mean, I've
Yeah.
been using STR data for 35 years now, and I think it's so compelling to see how you're performing within the context of the marketplace, rather than just am I up on last year or down on last year? Because
Exactly.
if you're more up than your competitors, you're doing well. If you're less up than your competitors, you're not doing so well. And if you're more down than your competitors, then you're not doing so well. But if you're less down, you're doing pretty well in a bad year. So I think it's great to have that data and great to participate. So sorry to interrupt, but over to you again.
No, thank you for that. That's super helpful. I mean, just before I close out on forward, so here's Glasgow. So same outlook as at June 1st, business on the books, and you can see that again during the Commonwealth Games, 80% of all rooms that we have in our reporting sample are sold, and it's well above last year's business on the books at the same time last year. But it's, you know, it's got its peaks and troughs each day of the week, and obviously you're reporting date to date as well, as opposed to day to day here. So, you know, sometimes you're looking at a Thursday to a Friday or a Friday to a Saturday, so you've got to take that into account as well. But generally, Glasgow looks like it's going to continue its solid path of growth in through those summer months. So shall I go and just do my little deep dive into Scotland so we can look at
Yes,
Scotland?
please. Thank
you.
Okay.
Okay, so let me just quickly go back on my slides and I will share again. All right, so let me just bring up my own little view here. Okay.
Oh, brilliant. Thank you.
Can you see?
Yes, we can.
All good. Okay. So here I'm just diving a little bit more into Scotland and placing the Scottish markets that we report on, the major Scottish markets versus the rest of the UK. So we love our little map. So we have a map here where you can see year-on-year occupancy change, year-to-date April 2026 for a select number of UK markets. So overall UK is going by 0.1%, but as you can see that growth varies depending on which market you are in. So we're starting to see some declines in what, you know, I would describe as domestic markets. We have flat growth in London, flat growth in York, flat growth in Liverpool. So it's very, very varied, but not very exciting at 0.1%. However, Glasgow stands out here with 8% growth in occupancy year to date April. Belfast also has seen good growth, 4%, despite big supply changes there too. So you can kind of see in context where Scotland is in performance in terms of occupancy. In terms of ADR, so 1% growth for total UK, and then each market is experiencing that growth in different ways. So London, back, Belfast, back, but the rest are growing 2 to 3% around the inflation or expected inflation for 2026. So again, not very, very exciting. But move up to Scotland and we've got Glasgow, Edinburgh and Inverness showing some of the strongest growth in ADR terms. So there's the good news that you were looking for. So let's look at Scotland, and I thought I would just take the 5 key markets and compare them so that you can truly see how uneven that performance is across the country. So in the middle here, you've got Glasgow. And I think it was Ian mentioned supply, or someone mentioned supply, and it really is. Glasgow is truly a story of supply and demand. So demand has grown by 4.5% year to date. That is 3 times greater than the supply growth, which ultimately means that you can grow occupancy without, well, not without doing much, but you can grow occupancy. You still need source business, events, etc. coming through, but occupancy can grow. And when occupancy can grow, so too can ADR, because you start to see compression, you start to see very busy nights where you've got 9 out of 10 rooms sold in the market, and that has resulted in a 13.4% lift in RevPAR. Now, the great thing about Glasgow is that the demand is very broad-based. You know, it is corporate, it's domestic leisure, it's a growing international visitation, and moreover, there's a huge amount of events that have supported this growth in the first few months of the year, and that is expected to continue as we go through the year. So that's Glasgow sitting right at the top there. And if you go to the right, to the left, we've got Edinburgh. So 5.7% growth. And this one is a story of, I would say, resilient amid expansion. So Edinburgh has one of the highest supply growth rates in Europe, so 3.8%. So that's one of the highest supply changes. You saw in my slides earlier that 1 to 2% was the average. So absorbing that supply can be very tough, and you'll see in my next few slides how much more supply is expected, so how much more growth is expected in supply over the coming year. But the great news for Edinburgh is because the demand is so strong, demand is actually growing at the same pace as the supply, and that is allowing for some occupancy change. So it's not a huge occupancy growth, but there is some occupancy growth. And then you've got this fantastic ADR generated by that strong international demand, conferences, events, etc. All of that is driving ADR. And Inverness too, growing strong. So occupancy a little bit back, but still maintaining good ADR growth. So I don't know if anyone at this point, I mean, I do have a number of slides on supply and demand. I can keep going, but if there's any commentary, I don't have a huge amount on Inverness, Dundee, Aberdeen. So if anyone wants to comment on that before I move on into more detail on Glasgow and Edinburgh, please do.
Well, maybe we can just come back to you in a moment, Aoife.
Yeah.
And picking up on something you mentioned earlier about the impact that the increase in VAT had on the Amsterdam market. What can we expect for the tourism levy and the impact that that might have on Edinburgh in August and September? Because we know that as hoteliers, revenue management is about selling at the right price, and we're having to absorb a lot of those tourism levies in our pricing. Is that going to drop the ADR for cities like Edinburgh?
Well, I can only compare it to Amsterdam. So Amsterdam has had a series of increases. So that the tourism levies were in 2024, I think, and then the VAT increases 2026. So it's had a huge amount of change. And now I think in total, when you add up VAT and tourism levies, it's like 33%. So adding that to a consumer that is already a very savvy consumer and has choice with wide distribution channels and all the OTAs, availability, etc., it definitely puts Amsterdam at a disadvantage. Dublin had the same scenario a couple of years ago. After COVID, the VAT rate went back up and we saw an immediate impact, not so much in luxury hotels or even upper upscale, but on the lower end of hotels, an immediate impact on rates because we're just not able to drive such high rate increases. So definitely there will be, and I know hotels are already challenged operationally, so absorbing that cost is going to be very difficult. So playing with that rate and getting it right is going to be even more of a challenge, I think, for the revenue managers out there.
Did you see at all in other cities outside of Amsterdam, like Utrecht and Rotterdam, that there was displacement of demand into those neighbouring cities when Amsterdam started introducing the tourism levy? Is that something we can expect for Edinburgh?
That is a great question. I don't have the data on that, but I can certainly look at that. I think displacement is, that's a great question. I think displacement is a definite. And even if it means you might not stay in Edinburgh, you can stay close by, you can stay in Glasgow, although there's a lot of compression there. You can stay in Inverness, you can stay in different cities. Yeah, why not? Why not? But hopefully that displacement will remain within the hotels.
Aoife, please leave your slides on the screen at the moment, but over to you, Ian. You've got something to add.
Yeah, just very quickly on the tourism levy, I think that one of the things you have to remember across Scotland is that 5 to 7% on a room rate in Aberdeen is a very different thing to 5 to 7% on a room rate in Edinburgh. Now, what we have seen, and this is actually really pertinent given that we have the same brand in two cities. Edinburgh was the first to come out and say that they're introducing a tourism levy. And as we know, people's attention spans are shorter and shorter. People don't read beyond the headlines. I am absolutely convinced, and we heard it from our customers who chose to go to Glasgow instead of Edinburgh at the start of this year, that they go tourism levy, again, it's something that's not been well explained to the general public as to when it's coming in, the purpose for it, and the benefit of it. So this is something that I see as already challenging operators, particularly who rely on that January, February, March domestic business to see them through the year.
Thank you. Kat, there was an interesting question from Manuel Brauer about conferences and events, and thank you for responding to that in the chat. But do you want to pick up on that and what you're seeing? Is there some kind of very strong demand coming in?
Yeah, I think we have seen consistent demand, and there's a concerted effort by both teams within Visit Scotland and across the industry, public and private sector, to really drive Scotland not as a mass MICE destination, but as a sort of high yield, knowledge-led MICE player. And we've got quite a unique opportunity with both Glasgow and Edinburgh as a cluster of within Europe. So I think there remains growth in that space to be had. It's really, really positive from a high yield visitor, out of season, so year-round demand perspective, and that kind of disproportionate economic impact versus volume point, so that sustainable growth opportunity.
Thank you. I think the visits of some of the US crowd last year, Trump and his sidekicks, impacted quite a few out-of-town destinations as well, didn't they?
They did.
Trump Turnberry and Cameron House in particular. Thank you. Aoife, should we go back to your slides?
Absolutely. All right, you should be seeing them on the screen. Just one second. Here we go. There we are. All right, so next slide. So just diving a little bit more into that supply demand story. So here you can clearly see how demand is outpacing that supply growth. So the orange bars are the demand, and then supply is the blue line. So, which is helping, of course, those rate gains. So supply is growing at a slower pace than demand. So supply is growing at 3.7%. And demand is growing at 5.2%, and that's in 2024. So you can see that here. And then this slows a little bit in 2025, but much of Glasgow's new supply was delivered, as you can see here with the blue line, in 2021 and 2022. But over the course of 5 years, so the last 5 years, supply has grown cumulatively by 22% in the city centre. So it's not to say that there is not a lot of supply, nor has there been change in supply. It's just that it's in the last few years coming in at a much slower pace than demand is growing for the city, which is great news for Glasgow. So very important part of how we look at the data, particularly when we're forecasting, which I'll come on to in a moment.
Will the Commonwealth Games be back in Glasgow in 4 years' time again?
Oh, I don't know.
I mean,
off to India.
Seems like nobody else wants to host them at the moment.
No, they're off to India, Robert. It's already been secured. I think the next 2 destinations have looked at the Glasgow
not going to pull
model.
out like the Australians did.
Well, the Australians are paying for the Glasgow gig, so we'll take the 100 million out of Victoria. But I think the team here have demonstrated pulling together a model that does become economically sound for a destination to host. So that's a good thing. But yeah, I mean, we'll take the positives.
So yeah, I'll keep going. So sorry, I can't see the camera, so I'm kind of a little bit delayed. But so the reason I've got this £100 note up here is that for the first time in that we've been forecasting Glasgow, Glasgow is about to break through that £100 ADR ceiling. So we have forecast £100, just over £100 for 2026, with an 82% occupancy. So really significant milestones for Glasgow. And it's not just about the performance in the immediate, it's about what that means for the city in the future as well, like how you build on that in years to come by attracting new stock, new inventory, and then new events as well. So full year RevPAR growth will be 7.7% as a result of that. So that breakthrough occupancy, breakthrough rate, which really outperforms the overall UK regional outlook. So Glasgow is on a winner when it comes to that muted supply and strong demand. And just going to Edinburgh, I thought it would be interesting. Like Edinburgh really, every time we look at Edinburgh's performance, we're like, gosh, how can it grow in more and more? And it just continues to grow and outperform every quarter, every year in the last few years, certainly that I've been looking at it. So it does have an international status, which Glasgow is obviously growing now. And you can see when we put it against some key European cities, 12 months to April 2026, look where Edinburgh is. It's got an average rate of 166 over the last 12 months, which is only £27 behind London and £11 ahead of Madrid. Like that's a phenomenal result, I think. And then you can look at the occupancy overlaid, 86% occupancy for Edinburgh when compared to Madrid, just at 83%. So really, really, it has a really strong foothold in Europe, and I think it can grow even further as that new supply comes in. So real RevPAR in Edinburgh now exceeds 2019 levels by 30%. So in the last 5 years, 6 years even, RevPAR has continued to grow as that ADR and occupancy beds in for the city. And as I mentioned earlier, the supply and demand story is quite different for Edinburgh. There is a balance in supply and demand growth. You can see they're touching, the bar is touching the line here in 2024 and 2025. Supply grew by 3% in 2024, and in 2025, demand grew by 5%. So it allowed for that new supply, any new supply, to be absorbed. So overall in the last 5 years, as compared to Glasgow, which had 22% growth in supply over 5 years, Edinburgh has only had 9%. So it's allowed that strong occupancy of 84% and 86%, I think, over the last 12 months. It's allowed that occupancy grow, and it's allowed that compression. And as we know, compression drives ADR. So it's been an important story. But what is coming next for Edinburgh, which no doubt will put some pressure, is that in construction, when all these rooms that are in construction come to fruition, now there are, of course, abandonments still happen, but that would mean a 16% growth on existing supply if and when all those rooms come in. So that's, significant growth for Edinburgh when you compare it to the rest of the UK, and in particular when you compare that to Glasgow. So yeah, a big change for Edinburgh on the supply front, which will undoubtedly put some pressure on there. So I'll stop sharing maybe and
yeah, amazing.
Hand it back.
I mean, Ian, we were talking in our call last week about obviously, managing one's distribution and the importance of AI. Is that something, obviously with this huge supply growth in Edinburgh in particular, and well, seemingly a huge demand growth as well, that's not going to be an issue. But if that were an issue, how do you stay ahead of the crowd? How do you stay ahead of your competitors?
Yeah, it's a good question, really, isn't it? Because AI seems to be the solution for absolutely everything, but no one can practically tell you what to actually do with it. What I would say AI-wise is to put on your hat and remember that you're an operator, you're a hotelier, you've got a self-catering business, whatever it is. And the first thing to do is start with the customer and understand how they're using AI. And in honest terms, the majority of people using AI are just using it as a search engine. What you need to be really aware of is that the sources that ChatGPT, as a prime example, is the highest growth thing, as the highest growth bit of tech out there. It doesn't use the traditional referencing models that we're used to benchmarking against. So it doesn't go to TripAdvisor to check review scores. It goes to Reddit. It doesn't go to yourbrand.com to find out about your hotel. It'll find a Wikipedia page first if it can find it, because it's lazy and that's what it does. So I would say from an operator's perspective, the first thing to do is understand what people can actually find out about your property and how they can get access to it. The second point that I would say is really, really important is actually to understand how the third party is selling to your business or using it with a customer. So, the OTAs have their place and they will always be a necessary thing within the industry. But more and more, they're going to be relying on tech to summarize your property, your experiences, what you deliver as a business, and more importantly, your ratings. They are your shop window. So you need to be talking to your rep from Booking.com, from Trip.com, from Expedia, and understanding how they actually present that to the customer. The two areas that I think internally that it can really sort of improve performance as a hotelier and looking ahead to how you really make good decisions within your business is one, talking to your PMS provider, talking to your EPOS provider, understanding what solutions already exist, because we're all guilty of this, having tech and not using it to its full extent. So I would say particularly the new generation PMSs, Cloudbeds, Opera, Muse, they're far advanced in their BI and how they can present this data to you, as opposed to the sort of what we've all got the habit over the past 5-10 years of going and downloading the same reports and looking at it. So you can get things presented to you an awful lot better. And it may be the case that where you have multiple sites, where you have multiple decisions to make, and you're a bit leaner on the ground, that it might be worth looking at a pilot system like Claude. Claude is one of these fantastic things that can pool data throughout your systems when you give it access. It's quite easy to set up, and essentially what it can do is it can take huge amounts of data and it can decipher it for you and put it into palatable terms. And I think it's important to remember that AI first was designed to compare data sets, and I would say that using that as a function is a safe thing to do as long as you're sense checking the sources. Where I would urge caution is within a marketing sense. Kat, sorry, your hand's up. You got a question?
No, I was going to add to it. So finish what you were saying, Ian, before I jump in.
No, I was away to talk about the perils of using AI with marketing, but I might go on a rant, so I'll let you interject.
I was going to just pick up on some of those kind of practical points from a discoverability perspective. I think the easiest way to think about that kind of world of AI search is that it's about reinforcing credibility and authenticity. So we're seeing more importance in things like traditional PR, so earned coverage, and making sure that that is consistent in what it's saying about destination Scotland, but also for yourselves in terms of your own brands, what it's saying about your properties, and reinforcing the narrative that you have elsewhere. So that kind of consistency across all channels with PR, and then influencers and other content creators also really gaining in terms of credibility, because they add weight to that in terms of discoverability. So
I think we also, have to we is it 40% of journeys start on AI already now, and it's only going to get more so. But we have to start to look at the AI journey, as Ian said earlier, and make sure that we are optimized for AI. It might be a search engine at the moment, but it's no longer just the very simple search that people are doing. It's a far more complicated search opportunity for people, and people are being far more detailed in their needs. And that's where AI, in much the same way that we used search engine optimization for our websites previously, we now need to look at AI optimization to make sure that we are recognizable and that we are coming up in searches, and that we're part of that start of that journey.
Yeah, agreed. I think the kind of Google's own shift is a really good indicator of that, as the leader in this market space. Arguably, they've come out and now said that they're no longer about driving website traffic, they are about answering questions. So they are going to answer as much as they can with no clicks through to websites, and therefore it's never been more important to be structured to be served. So your content is structured to serve from website into AI search directly.
Mark, is that something that the STA can help the members with?
Yeah, I mean, there's a lot happening in the industry in terms of education around the use of AI, but that reinforcement of making sure that your content is absolutely all over it. I mean, I've just was in the process of typing trust into the chat there. I think this whole, that you want that honesty, you want to be sure. Just as a slight anecdote, my brother has a global top 100 translation business, been going for 25 years, working across all different sectors of industry. And I thought, oh, you've missed your opportunity to exit, Chris, with AI. And he said, actually, we're busier than we've ever been, because people have gone off to get their product translated through using AI and are now coming back to his business to say, can you actually just check it's all accurate and correct? And of course, he's billing at a higher rate. So but that real piece, I think Scotland's all about honesty. It's all about localism. It's about those story tells, and that doesn't get necessary. That won't get picked up by AI if it's not there. Those representations aren't there. So there's a really good, there's a lot of learning and development activity happening. The HIT Scotland Executive Leadership Programme that was recently launched has got a great AI education piece on there as well. So there's those business leaders who've gone through it have been really, I suppose, bowled over with what's there. But it's how you plug in, and the Visit Scotland listings as well. Anybody can go on the site and actually, going back to Ian's point, make yourself visible, be there, use every opportunity to do that. So the reinforcement of that, and not to be, I guess, if you're new entrants and those new entrants coming into the market thinking that all they need to do is have a chat with AI or get, make themselves in that visible in that space to a point, are going to be the lost one, the ones that lose out. So our product is about storytelling, and it's about the richness and using those influencers well to tell those stories. And all of us, I mean, Gordon McIntyre on the call here today is in a different property every day, eating in a different restaurant every day, and as long as he keeps sort of reporting on what he's eating and drinking and telling the stories about the industry, then that's only a good thing for everybody. I'd just like to, as you saw in the chat, sorry, we had a fire evacuation here, and I descended 6 flights to the street, stayed online, and have now climbed back 6 flights.
And remarkably, not having lost any breath.
Well, I know it's this
It's your fitness
those
levels,
that know
Mark.
me, I work out regularly. I won't say where though. I'd just like to just pick up a bit. I know you touched on the visitor levy, and then those stats that we've seen for Edinburgh and Glasgow are fantastic. There are visitor levies in the process of being introduced across the rest of the country, and they are being voted on, and it's very likely that we will see a levy charge. I think what's perhaps not being spoken about or factored in is what that levy might do in terms of occupancy around the domestic traveller, the business traveller, the commuter, those who might choose not to stay overnight in the city and go home after an event. And yes, it's very much sort of modelled on assumptions, I think, that the international traveller will come. So there could be some wins in terms of displacement away from Edinburgh. Maybe only stay one night and pay your £20 levy, and then actually go out into other parts of the country and pay a lesser amount. But I think there's still quite a lot of unknowns in that regard, and there will be a tipping point for everyone, and that is again something that we don't know. But without question, we also need revenues to improve the quality of the public realm, the place, and enable those businesses and destinations to be even more so in the front of consumers. So there's a balance. So it's how that money gets spent, and when is it the right time to introduce it, and being quite I suppose considered about how and when you introduce it and at what level, because there's still Edinburgh's gone first, but we'll see how others actually come out. But it's all to play for. So I'll stop there. I didn't want to put on a doom and gloom, but I was just conscious I didn't contribute into that part of the discussion. But back to AI. Maybe ask AI.
Well, I mean, growth without profit is not growth at all, is it? I mean, that's what we have to be mindful of, and we need to make sure that your members and our partners here on the call continue to make profit out of hospitality, and it's not eroded by tax upon tax upon tax. I know it's been a confusing journey over the visitor levy.
I think, Robert, as well. I mean, as we all know, despite COVID, the world of travel continues to grow. People become more and more adventurous. They want to go out and explore the rest of the world. It's become much more accessible. It's certain parts of it gets locked down at certain times. So there are alternative options and choices. And when it comes to also experiences and touching quality and seeing how other destinations have raised the bar considerably, that will, the baseline is raised. And nobody, your discretionary spend has become a much more conscious decision on where you choose to spend your money. But we do know in the positive way that people still want a holiday and they still want to go off and enjoy, leisure time. And I mean, that's a good thing. So it's how do we capitalize on that and make sure that leisure time is here in Scotland and rather than as a first choice destination rather than it being elsewhere.
I think Kat mentioned the word authenticity earlier, and I think word of mouth is still going to be so important. And I think that is, that ensuring that dialogue is continued, that people hear about your property from other people. I think that's going to be still a very much more trusted source than AI, and AI will pick up on that. Thank you. Well, we're about 15 minutes to go of our session. Are there any other questions from our guests, those that are listening to this webinar? Ian, have you got anything further to add about your next journey?
No, I would probably just finish off the AI bit very quickly and tell everyone to remember the infamous Willy Wonka experience in Glasgow. So if you're looking to use AI for marketing, think very carefully about how you're using it. And no, listen, Luke, it's great to talk today. You can find me on LinkedIn. You can find me on ian@urbannessay.co.uk, which I thought was a great name for a pub 5 years ago when I bought the domain. So if you want to find me, you know where to.
Thank you, Ian. Kat, have you got any closing words?
Closing words. AI could go on forever, but I think to move on from AI itself, I guess remember that that's just a tool. I think that sometimes it becomes a bit conflated into becoming the be-all end-all. It's not a source in of itself, but it is a tool that can massively augment productivity in the back end and only kind of increases this non-linear world in which we live in now and consume information for the end user. Kind of going back out to the macro picture, I think it's worth reflecting back on the fact that growth, yes, we're seeing is going to be increasingly driven by international markets, and domestic remains fragile. But in all of that, the really key point is the quality of the experience, I think. And if we can continue to offer a good quality experience, then we have a very good product as a destination to offer to the world, and we'll remain competitive.
Thank you, Kat. Aoife?
Yeah, and I mean, I agree with all of that. I think, as Kat said, that quality is so important, and you can really see that in Edinburgh's performance over the last few years, and subsequently, seeing that now in Glasgow, and that's where tourism levies are useful if the money is going to the right place and you're able to build, a great infrastructure, build great attractions, because you need to generate demand. The demand just doesn't come. So that's what all the people on this call are doing for these cities. So hugely important. And I think on the AI piece, I just hope that independent hotels don't get left behind, that it all doesn't fall into the hands of big distributors. So again, like having partners like yourselves to help through that journey so that independent hotels also get a piece of this pie, because it is a huge opportunity to sell your wares within this big ecosystem of travel that we operate in. So yeah, thank you for having me today.
Thank you, Aoife. Mark, some closing words from yourself?
Yeah, thanks, Robert. I was just sort of going to type in. I said we must not forget our industry is always is and always will be about people, people telling great stories and delivering those unique and memorable experiences. And we have a natural ability to do that, and we have our Tartan Army doing that. Probably stories of maybe some that shouldn't be repeated in the public domain, but at the same time, just being great advocates and being passionate about what they do. And Scotland Outlook 2030, our national tourism strategy, still stands true to its ambition of becoming a world leader in 21st century tourism, and proud and passionate people working together delivering for Scotland is one of the pillars of that strategy. So I have a firm belief that we can still, live up to the expectations. There's no lacking in ambition across the country to be the best in class in all the places that we can be. And we have, a period in our annual calendar where festivals and golf and music are absolutely one of the strengths of the country's offering. So, we have to stay positive, and we have to ensure that our government and the politicians, not just here in Scotland, but across the UK, see this sector as, a force for good in so many different ways. And so the advocacy of the sector as a whole and its supply chain, not least around the VAT campaign that's going on, but also just making sure that investment is made into our marketing agencies and actually into the destinations as we would want it to be, comes through. And we are a future industry. And I think we all need to be making clear to those that think we're not, because as I've said before, and you've heard me say this, oil and gas will run out one day, but people will always want to eat, drink and have a holiday. So we're the game in town. So that would be my sort of closing words of support. But also, Robert, I'd just like to say thank you to you on behalf of the STA for your fantastic support as hotel partner of the STA. It's a great pleasure having you in the family and as a supporter as you are, and bringing together this webinar as you have done today. And to colleagues who've joined the call, thank you, and obviously other contributors as well. So we'll make sure that the recording is uploaded and shared, as I said earlier, for people to reflect back. And obviously, if there are any questions or people want to know more about what's going on, the various links to the Visit Scotland ourselves and others will be, and obviously HotelPartner will be on the website to tap into. And our signature conference just for next year, never miss an opportunity to sell. Get it in your diary. The date is the 22nd or 23rd February, and it will align with ScotHot, as we have done on every second year, which will be the largest showcase of tourism, hospitality, food and drink taking place here in Glasgow over the 23rd to the 25th of February. So plenty to look forward to, but lots to still do in between now and then. Thank you.
Thank you, Mark. And my frequent visits to Scotland remind me that Scotland, has a very warm welcome for people from all over the country and internationally. And it's not just the whiskey and the walks, it's very much the hospitality that you provide. So I'm a very big fan of Scotland. My thanks to Ian, to Kat, to Aoife, to Mark. My thanks to you for all joining us on this call today. I hope you found it informative. Mark and his team will be sharing the details of the next call, as well as the transcript of this call that we just had now. But it remains for me just to thank everybody for their attendance today, and look forward to seeing you on the next calls.